please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Sameer Goel, Head of Asia Macro Strategy of Deutsche Bank, joins us on the phone line. Good morning, Sameer. Always good to have you with us. Key takeaways from the policy. How would you trade bonds and rupee?
Morning, Lata. Pleasure to be on. Yes, I think the policy, I guess, at the very minimum, met the hurdle. Yes. Though I think there was a little bit of a mixed message in terms of having hiked rates, but yet keeping the stance to neutral. I think a lot of the language, certainly to our mind, read as providing for data points which will allow for, and in fact not allow for, but probably force further tightening to come in the following months. I mean, we for one think that the next hike could come as early as at the next meeting in August. But yes, the messaging was maybe not quite as hawkish as what it possibly could have been. It didn't change the pricing tremendously here at this point. I think for the bond markets, in some sense, what was relevant was how unanimous the decision was, but also equally what has been done, obviously, in terms of the valuation changes on SDL and all the adjustments done to provide for the LCR and the SLR, which I think is probably made a little bit more impactful. And it turns out the price action suggests probably more on the negative side and the bearish side than not. So I think the bond markets here are stuck in, I would argue, a lot bigger structural issue rather than necessarily just cyclical. And I, for one, continue to believe that the clearing price on that might still be only north of 8% on the 10-year. I think FX, you can argue, is obviously a beta to a lot of what is happening globally. And with the dollar, the DXY is obviously retreating a little bit. It hasn't been able to maintain 94. So I think there's some bit of that relief. And as you said, the strength on the INR, which comes possibly on the back of it. We're probably settling into a bit of a range on the summer, but I would also argue in the broader context that there is a lot of events which are coming up. So it's not going to be your typical summer in terms of being dull or boring.
Oh, dull or far from it, actually, north of 8%. I mean, that's going to cause a lot of heartburn to many people. Sameer, hi, good morning. But when do you expect this 8% level? Is it your near-term, range that you're looking at?
No, not necessarily. See, I think the timing on this is obviously subject to a lot of moving parts, and very importantly, what's happening in terms of beta to the sort of global picture. I think, as you know, the 10-year in treasuries and global fixed income in generally is anchored around some pretty key levels right now. I think a break north of 3%, which I suspect only happens in the second half of the year on the US 10-year. I think the ECB's kind of got very live on its tapering of QE. I think there's a lot of these global factors which can probably trigger that move, and I don't expect that to be necessarily very volatile or abrupt in India's case. But I do feel, I guess the point I want to make is that this is not just about pricing in one rate hike or two rate hikes. I do think in general the curve is probably slightly underpricing the amount of tightening which can happen. But I think more importantly that there is a very clear, structural demand deficit in the Indian fixed income markets, and it kind of feels like that might only really start to sustainably clear at yields which are higher than where we are right now.
Oh, yes, that is true. The structural, but the structure is also the way it is because people believe if they buy today, they will lose tomorrow. And that's because they fear the MSP. They fear the fiscal deficit. It's telling the government the right price for money if it spends too much. So, while I agree with you that there is a structural problem and a bio-strike, that bio-strike comes with a reason. But separately, Sameer, look at this El tweet on, the Brazilian real. And we've just had 2 or 3 currencies going through a spate of problems, emerging market currencies. Are emerging market currencies in a spot of bother at all?
No, absolutely are. I mean, I listened to your comments earlier, and I completely agree. I think this whole problem which started around mid of April, or the latest episode, was obviously in the beginning a little bit about some idiosyncratic stories which happened either with Turkey or Argentina. I think a lot of it was obviously with a big dollar move. I mean, the bigger DXY has moved 6.5%. That's recorrelated back to rates. I think we had probably overreached on the stronger side with a lot of FX, especially EMFX at the start of the year, with Asian FX at the start of the year. So I think there was a lot of that adjustment, that under hedging, which was being cleared up. So there was a lot which was going into why we have seen this move on EM. But I think what is interesting, if you look in the last few days, even though dollar G10 has retraced, dollar EM really hasn't. And I think some of that has to do with the fact that there is the fixed income spillover as well. I mean, if U.S. Treasury yields are going to be sort of breaking north of 3%, I think that will keep putting the EM under at least, if you might, a watch, if not a continuous stress. But I think it will make it harder for it to be able to rally back either.
Okay. So should I worry, should we worry about the rupee? Because the rupee is actually pretty strong, an extremely stable currency all through 2017. And even 2018, you can't really complain. And this at a time when current account deficit has expanded and looks all set to expand to probably 2.5%, 2.6%. Should the currency weaken so that this dichotomy ends? Or, can we continue like this? Is there an accident waiting to happen?
No, I'm not. I mean, it depends upon what you say about worry. I do think that the currency will weaken. So yes, and I don't think it will weaken to reconcile this. I think it will weaken as a result of this issue, but I don't think it will either necessarily be abrupt or terribly disruptive. This can happen in still a more orderly fashion, but I certainly do think that the currency will weaken.